Hello, welcome to Business Avenue, your portal for relevant tidbits for your career and business. My name is Edmond Gamia. On this episode, we are going to talk about how to achieve the right price for your product. Accurate pricing is essential for continuous business. Once you've been able to allocate the right resources to various products in the business, you are able to replenish them when they fall due because the money has already been allocated. You don't have to fall on your personal expenses or capital to have that done. Okay. So price, when we talk about price, we are referring to the selling price. So this is cost plus profits. So the cost of a product is the expenditure incurred in producing or how much it costs you to deliver or render a service. Okay. So this can be operational or production or non-production or administrative. Okay. So the cost is made up of materials, labor, and overheads in both settings, whether production or non-production. So let's deal with the production cost first, then we'll deal with the non-production later. So the production cost, we'll first deal with the material. So the material is the value of the substances or the elements that comes together to arrive at the finished product. Okay. So when you take a sofa, the production material will be the cushion, the fabric, the nails, the glues, the wood. When you take an attire, the material will be the fabric, the button, the thread. Okay. The material can be direct and indirect. So when we say material, we refer to the direct material. So a direct material are the elements or the substances that can be traced to the product. So when you take a sofa, the direct materials will be the wood. You have the cushion, you have the fabric, you have the nails, you have the glue. When you pick an attire, the direct material will be the fabric, the button, the thread that you will use. Okay. Indirect materials are one that cannot be directly traceable to the product. So when you take the sofa, an indirect material will be a hammer. When you take an attire, for instance, an indirect material will be the needle in the machine that you are using to pitch the fabrics together to arrive at a nice shirt that you intend to have. Okay. Now, materials are mostly variable. When we say an item is variable, it means that the cost of the item increases as the level of activity increases. So the more you want to sew an attire, the more fabric you have to buy, the more buttons you have to buy, the more thread you have to use. Okay. Now the cost of material mostly is easy to compute. So you basically know how much it will cost or how much you need in generating 1 unit of a product. So if you want to sew an attire, you know how much fabric or the measurement of fabric, the yards of fabric that you need to buy. You can estimate its cost. So if it takes you 2 years to produce a shirt, you just have to compute the value of getting the 2 years. You know the amount of buttons you use, then you put together their prices. Same for the thread. The next component of a production cost is labor. So labor is basically the human element or the human resource involved in producing a product. So the cost of labor can be variable. Okay. So it can be that when you employ somebody to produce a shirt for you, so the more shirts they produce, the more the remuneration. Labor, on the other hand, can be fixed. So what you do is that you give them fixed salary or wages for a week or a month. The cost of labor as well, if it is variable, you just have to pick the item you're paying them per product. If it is fixed, all you need to do is to estimate the number of hours that they engage in producing the item within a specified period. So if you're paying them wages for a week, and let's say they're supposed to work 8 hours a day, 5 days a week, so you take the 8 multiply by 5, you get 40. Then you divide it by the wages or the fee that you are paying them. That will give you an hourly rate. When you get to that hourly rate, then you need to ascertain how much they spend on producing a product. If they spend an hour, then you charge the hourly rate to it. So labor can also be direct and indirect. Direct are the ones that are involved in the conversion of the raw materials into finished goods. So when you come to the manufacturing of the sofa, the carpenter who stands behind the table and knocks the woods together and glues the fabric on the cushion is direct. Indirect labor will be the supervisor that is making sure that the job is done as per specification. Also, the factory security guard would also be an indirect labor. The third component of a production cost is overheads. Now, these are expenses other than a direct material and a direct labor. So when you pick a material that is not directly traceable to the product, for example, the needle in the fashion scenario, the hammer in the sofa scenario will be an overhead. When you come to labor, the supervisor's salary will be a labor. Okay. Now, other expenditures too, like the factory rent, the operational utilities that you pay, the security that is supposed to man the production house are all overheads. Overheads are sometimes variable. So if you take utilities, the more activity you produce, the more expenditure you get on electricity. They are sometimes too fixed. It means that you will incur a fixed amount of overheads for the production that you are doing. So let's say rent, you pay an amount of rent for a month and you produce. So no matter how much you produce, the rent stays fixed. Okay. Now, the cost of an overhead per product, okay, is somehow tricky because of their fixed nature. The process of allocating a portion of the overheads onto a unit product is called absorption. So you put together all the overhead costs. So the supervisor salary, the security salary, the utility rates, the machine. And here when we talk about the machine, you should be able to break them down into pieces and charge a portion of it onto the product. If the machine is going to last for 5 years, you should be able to break them down, the cost of the machine, break them down, divided by 5, you get a yearly cost. Divided by 12, you get a monthly cost. Then you divide the cost by the activity level, the product that has been produced within the period. So if you've been able to arrive at a cost per month, divide it by the number of product that has been produced within that month. And here, pricing for production cost is done per unit. You should be able to ascertain how much it costs to produce 1 unit. Here, if there are 2 or more products in the manufacturing process, the overheads can be absorbed based on the quantity that is produced. Okay, so if you have 2 products, A and B, and you produce 1,000 for A, 2,000 for B, it means that product B is supposed to bear 2 times the cost of overheads of A. Alternatively, you can use the number of hours consumed by the goods to absorb the overheads. Okay, if there are also 2 or more departments sharing the overheads, you can also use the activity levels of the department or the hours they engage in the department. Okay, now that we are done with the production or the operational side, let's move to the non-production cost or administrative cost. So these are costs that you incur that are not directly involved in the conversion of raw materials into finished goods or the delivering of the service. But this cost or this department are essential to liaise with the production department and the outside world. So once you produce the goods, they are supposed to draw the attention of the general public of the existence of the goods or transfer them to the market and have them sold. So the production costs are just concerned with bringing the product to its finished state or ensuring that the business has the capability of delivering the service. The non-production costs are the ones that burden themselves in making sure that the goods are converted into cash. So you have a marketing team, you have a sales team, you have an accounting department, you have an HR department. These are all support services, and this comes with cost. Now, this cost must also be broken down or absorbed onto the product. Okay, you shouldn't leave them out. In as much as they are non-productive, they should be also catered for. So there are also material elements in the non-production sections. So materials can be stationery, the computers that are being used, the office furnitures and stuff like that. They can also be labor. So you have the marketers, you have the sales personnel, you have the accountant, you have the HR staff. They can also be overheads, the utilities being borne or generated from the non-production department, the rent and what have you. Here, they are considered as an overhead. They must also be absorbed. But we must first add the non-production cost onto the production overhead before we absorb them onto the product. Okay. Here as well, the fixed assets in the non-production unit must also be depreciated. A portion of it must also be taken. So how do you get a portion? You estimate the cost of the product, the useful life, if it is 5 years, then you break them down into a period which is best known to you as a business person. Okay. So when that is done, you will be able to get the total cost of the product, how much it costs you to be able to get the product or deliver the service and bring it to the customer. Now, after the cost of the product has been done, now there is the profit element. So the profit is mainly what is attributable to the owners of the firm, the dividends or the profit in terms of a sole proprietor. So what accounts for the profit estimation is that normally the profit is arrived as a percentage of the cost. So what we call the markup. After you have arrived at the cost, the business can say, okay, we'll charge 10% of the cost as profit, 15%, what have you. So what necessitates the determination of the percentage is based on certain factors. One, the type of goods that you are having. If the goods that you are producing, you have similar goods on the market or you have substitute goods, people can do away with your goods. Then you don't have the leverage of charging a higher profit. Higher profit will lead to a higher selling price, because normally the cost associated with the goods are fixed. You cannot manipulate it because it will affect the quality of the goods. So the power of regulating the price lies with the profit. Secondly, the business strategy too will inform the level of profit that a business can charge. If you are now trying to gain entry into the market, then it will be advisable that you charge a lower profit for people to accept your product. Also, if you want to create a niche for yourself, you want to serve a peculiar people in the market. For example, you want to target high-end salary earners, you can put on more profit to arrive at a higher selling price. Okay. So once you get your selling price, then you are now ready to invite customers or push the product to them for them to patronize your services or buy your goods and rake in revenue. Okay. So, guys, this is where we're going to bring our discussion on pricing to a close. If you have any questions for us, do not hesitate to type them in the comment section and we'll gladly address them. Don't forget to subscribe, click on the notification bell, like and share. So we'll come to you again on another episode of Business Avenue. Take care of yourself and stay blessed. Adios.